What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 17th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why I feel most people in the crypto space are being distracted. And I don't want to make that claim boldly without having some evidence to back it up, so I want to spend some time to talk about it in today's video. This whole video is going to be about setting realistic expectations and not getting caught up in the noise and the hype and the drum up that you get on YouTube, on X, on the media headlines in the space. So I want to spend some time to talk about why it's important not to get distracted, because I think a lot of people are trying to get you distracted so you focus on a false narrative rather than focusing on what's really playing out in the grand scheme of things. We got a lot to unpack here in today's video. If you happen to enjoy, consider dropping a like, grab a cup of coffee, stick with me here. I think this will be a good one, guys. So I want to first talk here about Bitcoin's price action, because right now in the short term, as you guys have probably picked up from our last couple of videos, we've been talking for the last couple of weeks here about how Bitcoin is showing more and more signs of entering into a downtrend. And if you talk to a lot of other people in the crypto space, most of them will say it's a short-term bump on the road, it's a typical correction, this is nothing really to worry about. And those are the same people, of course, who were ignoring our early warning signs when momentum was stalling up here at the $90,000 to lower $100,000 range, when there was inconsistency at the 21-day moving average. But putting that aside, putting aside the fact that we have not been able to hold in the 21-day, that we broke through the 100-day moving average and the 200-day moving average and are now using that moving average, even before we attempt to try to get to the 21-day, as resistance, well, that already is concerning enough as alone. I know a lot of people are probably wondering, Nick, I've been hearing a lot about this huge short bet that's been built up here as of recent. There was a big whale who built this big short position. Isn't the market going to chase and liquidate these short positions, and it's going to drive Bitcoin's price higher? And we never short Bitcoin, never bet against it. And look, at the end of the day, guys, I wouldn't tell you guys to short Bitcoin. At the end of the day, I'll just make that clear. I'm not here to advocate for that. This large whale position is what everyone got focused on because of its very large dollar position size. I mean, this is just a major position. And of course, crypto Twitter flipped out when they started to see that they were talking about going long, switching their position. Now this must mean, this person knows something that we don't know, and it's time to go incredibly long right now in the market. So you can really spin this any way you want. If you can tell yourself it means something that you want it to mean. And you're just going to constantly see people saying this is a justification either for a short squeeze or a reason to go long because this insider knows what they want. So again, you can really spin it both ways. I want to kind of bring you guys back to center here, because all this stuff is just noise. It is psyops, it's manipulation, it is how the broader institutional crypto industry, the whales, large exchanges, can create and drum up small short-term narratives that will be forgotten about tomorrow after everyone gets liquidated trying to trade against these events, right? Essentially meaning that all this is probably with the incentive of encouraging you to trade, encouraging you to take risk that you probably shouldn't. So you will become the eventual target. You will eventually become the person who gets caught in this trade. That's already one thing. I just want you guys to be aware. When you see all this stuff in Twitter and everyone raging about it, it is usually in some way, shape, or form built in a way to get you to overtrade and get liquidated, because that is what the exchanges want, right? So I wouldn't be chasing these stories. And in fact, I would really start to get a little bit wiser at the end of the day. I'm not saying, I know many of you are probably, itching and feeling this right now in the crypto space, and you're wondering, it feels like things are getting kind of weird at the moment. But I'll just put it to you this way. Don't get so sidelined by all of the hype stories. You remember the crypto summit back a couple weeks ago? This was supposed to be a major catalyst for crypto. Didn't do anything for price. Didn't buy any Bitcoin, didn't buy the plethora of altcoins that were mentioned in the original Truth Social tweet. And of course, while that might change one day, I'm pretty sure if the federal government even is going to find somehow a budget neutral way to get some allocation of capital that isn't going to cost taxpayers, they are not going to use it to buy your XRP or Solana bags. Just putting that out there right now, as well as ADA and all these different tokens that people are hoping to be bought up by the federal government. No, in fact, I think all of this, as well as the countless distractions that are constantly tossed at us, are all distracting us from what really matters at the end of the day, which is the long-term price trajectory, And along with that as well, the inflows and outflows from the Bitcoin ETF as well as MicroStrategy, because those two elements are the biggest factors that are going to determine price. And when we're talking about price, we need to really wonder where we are in the grand scheme of things. Is this just a bump in the road, a midterm correction here through a broader cycle to the upside? And are we going to 500K like Plan B and so many optimists are telling us? Or are we in for something a little bit more brutal? Maybe not a full-on 80% bear market, but a serious correction. Well, we should be asking these questions, and we should be looking at the long-term price, because while MicroStrategy took a huge advantage of its premium back here in November, December, bought up a ton of Bitcoin, those Bitcoin purchases are slowing. There's not been a new one since back here in late February. It's been multiple weeks. Michael Saylor's going on a road tour speaking to all these big hedge fund managers. I see the posts and tweets where people are saying these people manage trillions of dollars, MicroStrategy, and Michael Saylor are pitching them on the idea of Bitcoin. I'm not seeing it in the inflows. And in fact, while there has still been some solid Bitcoin acquisition here since January, I'm not going to completely ignore that, 50, 60,000 Bitcoin being added. It certainly isn't helping Bitcoin's price here. It's not enough. And if you start to match that into the ETF outflows that a lot of people are choosing to ignore now, it starts to make sense, because you're seeing very clearly here from late January, there is a clear outflow for the last 2.5 months from the Bitcoin ETFs of over 50,000. Actually, sorry, my math might be wrong here. 60,000 Bitcoin from the ETFs. That's not a good look. And the fact that this is going on over the course of 2.5 months makes it even worse. So this really leads me to not only pointing out the short-term relevant price action, which is obviously concerning, that there are not many ways to pitch this as being bullish. Again, outside of that, this might be a short-term deviation, and maybe we whipsaw back up here, similar to what we did back here where we had some chop and traders on both sides get knocked out or messed up. But this really leads me to talking about what matters most, guys. It's the long-term trajectory. Where are we in what may be defined as a cycle, if we can still call these cycles? In the same way, I don't believe we would get a massive bear market. I don't think we're getting massive bull markets anymore. And the reason I point that out is because history just shows us we are heading that way. It shows us that bottom to top, we are getting weaker and weaker and weaker rallies. And we are getting weaker bear markets, ones that used to be over 87.5% from top to bottom to 84.8% to 77.7%. So I want to make it very clear, I'm not saying here, while I do believe that markets are more and more leaning to the downside, I'm setting realistic expectations for where they could go to the downside, and vice versa. I want to set realistic expectations for where they can go to the upside. And if you just take a look here at history, you'll see that usually with each of these expansions, we usually have a 1/5 or 1/6 reduction in the multiple potential, meaning that, if you, for example, if we take a look at here at history, had a 65,000% return from October 2011 here to October 2013, 2-year window here, massive returns, and a 65,000% return. That dropped to a 12,700% return in the next cycle. Again, not bad at all. I'm not here to start, saying, Bitcoin really didn't show up to the plate. It absolutely did. But this is an example of diminishing returns over time. And you see the exact same thing play out here. We go from 12,700 here to 2,100, right? Roughly speaking, that same kind of decaying multiple factor that we saw in the prior cycle before. And now we're stepping into what may be defined as kind of the fourth bull market. We did blow through the prior all-time highs of the last cycle, but not in a massive, significant way. But still, 600% return. Nothing to scoff off on. We certainly missed out on a lot of it back then. I'll say when we get things right, when we also get things wrong. A lot of people won't do that, but I'll let you guys know about that. So considering that, it's up 600% from bottom to top. And if you consider that is already a phenomenal return from bottom to top versus the prior cycle, considering what usually happens, the usual decay in multiples that we've seen historically. And this is so far panning to be on par to be one of the worst quarters we've had. It depends on how things are going to close here into the end of March. But we are right on pace to either be similar to these kind of red quarters here that we've seen, or potentially, if we aren't able to get above that 200 and start flushing down, to potentially have our worst quarter here since this uptrend has started back in October 2022. And it's been a good while here. We've had it is coming up here on 9 quarters that we have been going in this trend here to the upside. And that's very similar to most cycles here. The only one that would be technically an exception to that, you could squeeze it here to 11 quarters, whatever, 12, 11 quarters, give or take, was the one between 2018 or October 2018 and October 2021. So my point here is that Bitcoin has made a really solid expansion. I think we should recognize that. It is still probably got room to move up long term in the grand scheme of things, but we have to also understand that the number doesn't consistently move up and to the right every single month, every single week, and every single day, or every single quarter, every single year. It has these really bad windows of time that are going to leave people losing a lot of the returns that they made on paper. And if you aren't ready for that, especially if you're trading in the market and are over leveraged, you could be caught holding the bag in a really bad position. And this is also true for altcoins, right? What I'm seeing here across the board, and this is going to be kind of my general theme we'll get into when we talk about the macro segment of this video, the thing that I think you guys can't ignore. Unfortunately, a lot of people are just kind of focused on the microsphere of crypto and what Michael Saylor is talking about, or what the government is saying they're going to do with the Bitcoin strategic reserve, whatever, everything around crypto. I think we need to focus on the macro because that is going to give us a lot of hints as to what's coming. Before we dive into that, I just want to again look across the board here on the risk spectrum across the crypto industry. And you can see that total 2, the market cap of all crypto excluding Bitcoin, divided by Bitcoin, not to mention if you probably factor in stable coins as well, remove that out of the equation and the growth of stable coins, you'll see that we've just been in a complete downtrend here in dominance for total 2, down to our lowest level since back here in 2020 and 2021. Years of decline here since back at our peak in October of 2021 where we stagnated and we never really ever reached the January 2018 highs. And this looks very well on its way coming down to this range. So if Bitcoin is not going to show up to the plate here, it's going to continue bleeding, what is that going to mean for altcoins and the risk tail end of the spectrum when it comes to crypto? I think you've got a very good chance of this coming right down to this channel, not to mention seeing that we weren't able to hold on that 100-month, that yellow line here. That should have been the perfect support range, perfect accumulation range. Instead, we broke through it, treated it as resistance, and continue to lose more and more dominance here. There's market cap as well when we take a look here on the weekly time frame. Instead of being able to reclaim the 21-day, which should be a very simple feat here if we are set up for an altcoin cycle or some type of bottom in the market, right? Instead, we are still treating the 21-day as resistance as we come in here to the daily, but along with that, the 100-month moving average, right? I want to put this in perspective. This is the average for the last 100 monthly candles. Years of price action, this average, which makes it a very big psychological level in traditional markets for accumulation alongside the 200-week. And in this case, right now, it was choppy initially, and now we're treating it as resistance for the last couple of days with our new lowest relative low versus all the prior ones since back here in the month of February and the first half of March. That just doesn't look good to me. And what it looks like to me is that people are finally cutting out the noise. They're cutting out all of the froth and meme coins, all of the rug pulls and scams, the fake or weak narratives in the market that don't really hold weight, that don't have strong fundamentals behind them. And there's a good thing to point out here, which is that this will be a good opportunity to filter out all the bad actors, filter out all the bad apples, and then eventually be able to really build positions and solid plays in the market. And that's what I'm interested in. I think we're getting to the later innings here. So I don't want people to take this as some really, kind of ultra bearish take. I see this as an opportunity in the market. But first off, I think we need to go through this a little bit longer. I think it's got a ways to go because of the clear inconsistency over the last year or two. If you look at the long-term time frame, the lower level of others' dominance here versus the 2024 highs here at the end during the election and the change of the kind of regulatory regime around crypto with the new administration. And even with that, others' dominance is now trending down here at this range, right? Now, again, as I mentioned, I think that this is going to be opportunity perhaps in the grand scheme of things. There will probably be an opportunity for an oversold bounce. There will be an opportunity where after flushing out a lot of the bad actors, we can start to focus on the good plays in this space. And I think that, again, I'm going to start looking at those fundamental sectors, ones that stand to benefit from the changing regulatory environment. Things like DeFi, for example, which have cooled down a substantial amount, pretty much cutting down all that premium from the post-election rally here in mid-early November. So I'm going to be looking, depending on how things play out here, how things continue to play out and where there might be opportunity here, focusing on some of those fundamental narratives. Now, obviously, I'm also going to be looking for new emerging narratives in the market, ones that have serious weight to them, that are backed by serious projects or entities in the crypto space. And as I want to talk about on the kind of macro scheme of things here in a little bit, I do want to spend some time to share with you guys some details around our video partner for today, and that's Vechain. Now, Vechain is not some new project out of the block. Vechain's been around for a long time in the crypto space, and they are one of the strongest fundamental plays when it comes to building real-world enterprise applications, as this was their key focus. They've focused a lot working with a wide range of different companies, focusing on NFC and RFID technology, essentially working on making sure to fight basically counterfeiting various fake products, and being able to maintain authenticity for a variety of different consumer goods through the supply chain system across the globe. So this was the original kind of killer application, and there's a lot of different projects in the ecosystem that utilize Vechain's network and technology, as well as a wide range of corporate partners that they've worked with. But beyond this focus in enterprise, Vechain is focusing on a really interesting emerging narrative in the space that I think you should keep on your radar. And this is the concept of DBAN, which is decentralized better action networks. Probably one of the most consistent things I've seen in the crypto space that has proven crypto's utility to some extent is that essentially you can use token economics and decentralized applications to gamify behavior. That you can build new entire movements by building these token incentive schemes and rewarding people for engaging in good behavior. This is something that, as you can see from airdrops and a whole range of other things, really proves the effectiveness of being able to get an idea to go viral and get an initial foothold. And VBetterDAO is one of the new projects from the Vechain ecosystem. It's a part of the broader Vechain Renaissance, which is a big update and focus for the project. But they've been focusing on this idea of better action networks, which is covered by Boston Global Consulting and a whole range of other firms as a new emerging narrative in crypto. And you can see here that essentially through the VBetterDAO, token holders and participants in the ecosystem and validators basically go out and vote on which applications should get a essential allocation of the better tokens, which is the native token for the network. And all these applications are focused on driving positive change. There are things, for example, that reward you for your shopping activity, doing certain types of ecological-based activities, for example, like recycling, or being able to do some kind of upcycling. And outside of this, well, even simple things like mugshot, which reward you for taking a photo of your cup of coffee in a mug rather than using paper plastic cup. So like there are really simple things like this that can really have sizable and impactful change across millions of people, and they have these really nice thought out mechanisms for rewarding people within the ecosystem for participating in these activities. Sometimes things that are invested as well in things like solar and helping to actually have really big impact beyond just your kind of end-to-day consumer activities, where you can participate in this larger, bigger effort across the board. Now, of course, there's the governance system that's constantly always working on improving it. You can see also as well the historic allocations of the token supply, which applications got the most votes and delegated better tokens. So this to me is really exciting. Again, it's a part of a broader vision for Sunny Liu and the Vechain team. So if you guys are interested, definitely not only consider checking out Vechain on X, but a lot of that as well, following Sunny Liu and just kind of looking into it and seeing if it's something that's interesting to you. I'm not here to show it to you guys or anything. I'm just here to let you know that I think that this is definitely something you should keep on your radar. And above all, it's definitely exciting to see that, in a space where there really hasn't been many new narratives, that this one actually looks like there might be something to it. So I always keep my eye on those emerging narratives, because if you can get your foothold early on that can really play to your advantage in the long term. So definitely keep that out. I'll leave a link down in the description if you guys want to check it out. But wanted to get back here to talking about this whole long-term picture thing, because this doesn't just have to do with Bitcoin, guys. I know so many people usually will come to my channel, probably go to other people's channels, and you see by the thumbnail or the way they speak about in the first minute, and you assume, oh, this person likes Bitcoin, this person doesn't like Bitcoin. I absolutely love Bitcoin and crypto in many ways. There are obviously a ton of things I could be critical of. Being in the space for so long, so many undelivered promises for that matter. But I do think that Bitcoin is going to be here. It is a very exciting technology. It's very disruptive. I'm happy to see Bitcoin accessible from ETFs. I'm happy to you see that it's accessible to a wide range of people, that governments are considering owning Bitcoin as a kind of strategic hedge. This mature, kind of mature process of Bitcoin becoming this large mainstream asset is definitely very exciting to me. As someone who's traded in traditional markets, I'm happy to see the vision, at least in that extent, did materialize from what I'd hoped for back in 2017 when I got really active in this space. But I want to talk, though, about purely Bitcoin and assets as a whole from an investment perspective. You come here to this channel not to talk ideological thought process around, what is Bitcoin at the end of the day, and where's Bitcoin's place in this world? No, you come here to ask whether or not the price is going to go up or go down, because at the end of the day, you got to think about that, right? You can love Bitcoin, but if you're essentially going to be putting your hard-earned money into it, you better hope that the value is going to go up over time. I think we would all want that. If I replace BTC, right, the symbol for Bitcoin, with Apple stock, you're not going to want to buy Apple stock if Apple stock is going to go down over the next couple of years, right? Well, this is what I'm leading into here, because what I'm going to talk about doesn't just pertain to Bitcoin. It talks about everything, all assets. Right now, we are at a generational all-time high. And when I say a generational all-time high, I'm not just talking about the fact that we pressed all-time highs back about a month ago. We were at all-time highs in stocks. We've pulled back a little bit, and I think many people believe that this is just kind of a little temporary correction. It's not a big deal. And what I want you guys to consider is that they may be wrong. And I'm not here to say that we're going to have some massive flash crash, the market's going to go down 80%, we're going into a depression. But I want you to consider that we could very well be entering into an equity bear market, and along with that as well, potentially something that I think is worse than just some little short-term bear market or flash crash, potentially entering into a lost decade. And I don't think there are many people prepared for this. I certainly think there aren't many people prepared for this when it comes to Bitcoin who have been stacking sats. And that strategy, which has been working for them for so long, they will not be able to think different or think that, oh, wow, we might be entering into a decade where that strategy, which was one of the best, is probably not going to work this time. And in fact, could work very heavily against you. And the reason I say that is because right now, if we take a look at the S&P 500, we have 95 years to work with this resistance channel. And the only other time we officially touched up here and got, or at least close to it, was in the Roaring 20s, where the channel starts, here at the dot-com bubble, here in the COVID bubble, which you remember how ridiculous that was. And now we are trading at a higher valuation than that, even after the pullback is considered. We are still nearly 1,000 points higher, around 800 to 1,000 points in the S&P 500, multiple double-digit percentage points higher than where we were back there in 2021. We are not only extended away from the 200-week moving average, right, which is down here at 4,700 points at the moment, so about a 900-point correction from this point on. Again, it will probably creep up over time, so that's probably not where price will make contact, but still, you've got this huge gap between the 200-week, huge gap between the 100-month, which hasn't been touched since back here in 2020. And not to mention, as we're talking about this being a channel here where we can see many historic retests of that line of support, we are incredibly extended away from where that line is. I would say, given time, of course, that corrections don't just fall in a straight line, that we are essentially trading at more than a 100% premium from that support range, meaning that we're looking at potentially a retest here between 2,500 here to 2,800 points if we were to get a retest of this line, and that's going to be a brutal correction from this point on. Over 50% correction here in valuations. And can that happen? Right? I know a lot of people say it can't happen. We're in a new paradigm. There's AI. There's just so much money in the world. Everything's fine and dandy and great. But I have to tell you guys, we've seen this before, right? And it happens over very long windows of time, like 1982 here to 2008. That's a long period of time, over 26 years before we retested that lower line again, right? And we can see here as well, we had multiple retests in the 70s. We had them back here in 42 and 32 as well. So this is over a longer term picture, but what happens in between those, I'm not so much getting you to be fearful about that in-game point, right? It's about how we get there. And if that means that essentially we're heading in that direction, then we're going to have a lot of chop and uncertainty and probably generally lower highs and lower lows. Doesn't mean we can't make money in it. Doesn't mean that there aren't some great trade opportunities where we buy oversold environments and sell into short-term euphoria. But I'm here to say that if your goal is to just kind of passive invest, it may not be the time for that. And it certainly may not be the time to be in the most risky assets in the world, like altcoins. That's my point here. And I say that as someone who made phenomenal returns on crypto. I want you guys to make phenomenal returns, but I'm not going to sit here and sell you on the lie that crypto is anywhere near where it was in 2017. And you don't need me to tell you that. You can look at these percentages here. And you certainly don't need a ton of YouTubers, a ton of anonymous non-doxed accounts on X that could be created and managed by one single person, dozens of different accounts, preaching and telling you that you need to buy, do this, do that, get into this airdrop, put all your money in this one meme coin. I certainly wouldn't be listening to them when the data shows me very clearly that we've already had a phenomenal rally, right? And that we could very well be in for a nice heavy correction from this point. The number one priority you should have here in such a euphoric environment, an environment where growth multiples are no longer what they used to be, you need to be looking to preserve and protect your capital first and foremost. That is just principle number one, if you ask me, if you come here for my advice. Preserve and protect your capital. Doesn't mean you can't have some skin in the game at all times if you really believe that Bitcoin is this hedge if the system were to collapse tomorrow. We've been talking about that for years. And I think that, to be honest, there's a good chance that Bitcoin wouldn't be the asset people would turn to in that kind of environment. There's a very good chance because Bitcoin has performed best during good risk-on periods. It does terribly during corrections in sentiment. And if you need me to kind of spell that out and stuff, again, we can take a look at the S&P 500. Bitcoin did not do well between October 2021 and July of 2022 when the broader equity markets were cooling down. There's a clear synergy between them. Bitcoin flash crashed here in March alongside the broader equity markets and was the best performing asset, far outpacing stocks when we went on that uptrend, right? So I am very well aware here that Bitcoin is a great asset. It is something that for sure you should have probably a little bit of, no matter what, that's totally fine to do some passive DCAing, but I would say DCA and heavier on broader corrections. And don't be afraid if you've made a lot of money in this space over the last couple of years to take some chips off the table. I think that's the key mindset here, is to be better safe than sorry here at the end of the day. Because right now, the market is reaching for straws. We are just trying to take the most basic things, like, not to mention these like multi-$100 million positions. I know it sounds like a lot of money, but really, like, considering crypto's market cap now, it's not. Considering this is a leveraged position, mind you, so it's utilizing borrowed capital, right? So the underlying spot amount that's actually being traded here, the real amount, is much smaller. Like, I don't know. I see a lot of people getting sidelined by these really nefarious actors in the crypto space who are just drumming up, engagement, attention, that lead you to over trading on leverage, and losing a lot of money. And I'm not going to sit here and promote that, guys, because I think there's a very clear setup going on here with resistance at the 200-day, consistent lower resistance at the 21-day, which is falling off a cliff here. It's doing pretty much the counter opposite of what it did here. As supporting price back here, now it's facing resistance against price. I think that we're spelling out a potential very painful correction down here to the 200-week moving average. MicroStrategy looks exhausted. The ETFs look exhausted. The government is not going to take taxpayer dollars and go out and buy Bitcoin in any meaningful way. And when it is trying to reduce expenditures in the government, this, I think, in many ways is going to negate its ability to have revenue, essentially, basically no cost or kind of like budget neutral acquisition vehicles to buy Bitcoin, like I talked about in the White House summit. I think that's just purely a statement to satisfy crypto participants and to make the administration appear as if it's doing what it promised to do. But then again, the administration didn't promise anything outside. They just said that they would create a strategic Bitcoin reserve, and they technically did that with their holdings. And I think the market just set really ridiculous expectations. So I rambled on a good amount here today, guys. I'll probably let you go here and just have the rest of your day. But I just want it to again be emphasized here that I think that there is potential in crypto. There are going to be opportunities. There are some really bright people in this space building things. I've met many of them, but I think many of them are disheartened because, unfortunately, investor sentiment now has been on a lot of the meme coins, AI agents, speculative, baseless narratives that don't really have any foothold in the real world, and that is going to come to roost eventually. And I think we're on a slow but steady process of that happening where these pullbacks are going to accelerate, and it's going to catch a lot of people by surprise. So, not telling you to short the market, but certainly saying that having a pile of cash wouldn't hurt. So, I don't know, guys. Do with it what you will. Take it with a grain of salt. Listen to other voices out there again, and see what works for you. I know you guys are going to make the right decision at the end of the day and stuff, and even if you get it wrong and stuff, it's a learning lesson. That's what markets are all about. And the more you can learn from markets, the more you'll learn to navigate this very difficult and tricky and traverse environment of finance, where you can hopefully make those life-changing returns that I know a lot of people want to make. So, have a great day, guys. As always, if you enjoyed this video, consider dropping a like. It's a great way to support the channel here. And until the next one, I'll see you guys in the next video. Take care, everyone.